All right, everybody. So today we're going to be doing a recap of the crazy major things that happened in the year 2025 that hurt all of us financially, right? So usually Ryan and Clara, they normally do this type of segment here, but they are actually on vacation. So they have left me with the task to get this done for them. So I don't want to waste anyone's time. Also, Happy New Year, by the way. Hopefully, 2026 is a much better year for all of us financially. That's why we're going to get together every single week with tips, with sharing stories on how we can impact our sales and rescue our wallets this year. Okay. So without further ado, let's get started. These topics we're going to review one by one. Okay. And I will explain to you ways that they have affected your wallet and how they have changed the scope of how we are going to save our wallets going into this year of 2026. I mean, we have to be prepared, right? I want you to think about it. How was your wallet affected in 2025? So, the main thing we're going to talk about again is the Section 8 crisis, government shutdowns, and also economic inflations and job losses. So, with the Section 8 crisis, right? For those of you who don't know, this the program that has the Section 8 housing choice voucher. And what that program does is that it helps low income renters pay a portion of their rent while their landlord takes care of the rest, if that makes sense. These are for people who are low income. Now, there were several federal budget issues, delays, and shortfalls. And what some tenants saw was delays in subsidy payments, slower renewals and inspections, and rising rents that vouchers didn't fully cover. So, under federal proposals, funding was not keeping up with the rising rent. That's what caused these problems, and in some cases, caused people to be at risk due to the government shutdown and budget fights in Washington, which we'll talk about that a little bit later. But it caused those delays or shortfalls in monthly payments that were being sent to some landlords when local housing authorities reported funding delays. So that means that the subsidies were slow or uncertain. And at times, long-term proposals in Congress even aimed to limit the number of vouchers issued, which that kept funding pretty much flat, even though rent prices continue to rise, which, if enacted, could mean hundreds of thousands of, fewer people receiving assistance, pretty much. So, of course, this directly impacted the people who were Section 8 tenants, right? One was the risk of losing vouchers or facing reduced support. So many tenants that were worried that cuts or funding limits would mean that they could lose their housing help or wait even longer for assistance. Now, this is especially stressful because Section 8 help is often the difference between being able to afford a home or not, especially in expensive markets. Then we got the rising rent without matching assistance. So, because the federal funding proposals didn't account for rising rent costs, vouchers didn't stretch as far. And that means that some tenants ended up paying more for their rent out of pocket or waiting longer for assistance. Then there is the administrative delays from the shutdown. So during the government shutdown, which again we'll get into a little bit later, HUD, they furloughed a large number of workers, which caused delays in processing rent assistance, renewals, and inspections, and other program activities. So the financial impact. So tenants could face a short-term cash strain, risk of eviction if there were payments delayed, and uncertainty about future subsidy availability, right? So financially, this put tenants at risk of the temporary rent gaps, late fees, or worst case scenarios, like I just mentioned, eviction notices. So when it comes to the Section 8 crisis, everyone tends to think that only the Section 8 tenants are impacted. This is not true. The landlords were also financially impacted. They were heavily impacted, you guys. One, it was the uncertainty about the payment timing. So landlords who accept Section 8, they rely on their monthly voucher payment from housing authorities. So funding shortfalls and delays, guess what that means for the landlords? That means they didn't receive rent subsidy payments on time, and that impacts their cash flow and ability to pay mortgages or utilities and maintenance costs. Then there's two, the fear of reduced participation. So because funding was uncertain and rent increases weren't being fully covered, some landlords were hesitant to renew leases or accept new voucher tenants. So higher admin burden and delayed payments made Section 8 participation pretty much financially riskier. Then there is the shutdown challenge, right? Which we'll go more into that later. But the financial impact is less reliable income streams from the vouchers, higher administrative burdens, and potential gaps in rent payment. So financially, landlords dealt with cash flow issues, missed financial projections, and higher risk in keeping units affordable. That's a lot, right? So if they're dealing with financial impacts, so of course the tenants will deal with financial impacts because the landlords, they're not able to rent to them. So here's what tenants can do in 2026 to prepare, or because preparation is protection, right? So you want to stay in communication with your housing authority. If there's a delay, don't wait. If there's a delay, don't wait. Ask the necessary questions early and document everything. If possible, build a small emergency buffer. Even saving enough for one partial rent payment can make a difference during the delays. Also, if payments are delayed, don't hesitate to ask about grace periods or emergency assistance programs. All of that is helpful, right? All of that is very important. Keep paperwork updated. Missed renewals or expired documentation are one of the biggest causes of payment delays. Look into local rental assistance programs if needed. Many cities and nonprofits offer short-term help, but you do have to apply early. So what landlords can do in 2026 is remember that preparation is key. They need to stay in direct, or if you are a landlord that does rent to Section 8 tenants, then you need to stay in direct contact with your HOA or local housing authority. Knowing payment schedules and funding updates, it does help you with planning. You need to maintain a cash reserve. This helps cover short-term delays without falling behind on expenses. You also need to be proactive with inspections and paperwork. The faster compliance is met, the faster payments are released. Check for local incentives. Some cities offer tax breaks or bonuses for landlords who continue participating in Section 8 programs. Check into that. They are out there. And so going into this year, 2026, both sides can stay prepared by staying informed, communicating early, and planning financially for possible delays and policy changes. Because nothing is ever permanent. Now, everybody else out there. Just because you are not a Section 8 tenant, and just because you're not a landlord that rents to Section 8 tenant, that does not mean you were not affected. You were definitely impacted. Let me tell you how. You were silently impacted. Cities spent more on emergency shelters during that time. Local economic slowdowns happened. Funding was needed for like social services, healthcare, enforcement. And at the end of the day, that comes from local, state, and federal budgets. And guess who funds that? The taxpayers. So if you are somebody that works and you pay taxes, you are the very same people that fund these programs and keep them operating. So you were definitely hit financially. Also, productivity dropped. So can we talk about that? A lot of people struggle with that. Rise of healthcare costs literally out of nowhere. One minute your healthcare plan is a certain amount per month. Next thing you know, you get a letter in the mail, or some people didn't even get a letter letting them know, hey, your healthcare cost is going up. And then all of a sudden you're feeling like that's not fair. Yeah, that's silently coming from these impacts here, such as the Section 8 housing crisis. There was increased public spending, elevated economic stress levels. I mean, so many people were stressed out during this time. The whole economy became a drag. Even homeowners and higher income households, they indirectly pay for the fallout through higher public spending and strained city budgets. So the Section 8 crisis, it wasn't just low income issue. It did quietly push rents higher, it tightened housing supply, and it increased costs for everybody in America. So now let's get into the government shutdown. So the shutdown started October the 1st and it lasted all the way to November the 12th. Now, this is not the first time that America has had a government shutdown, right? Out of all of the shutdowns that America has had, this was the longest government shutdown in history. Do your research, the longest one in history. 900,000 federal employees were roughly furloughed. And all of this happened because Congress failed to pass all of the required funding bills for the new fiscal year. Then lawmakers, they couldn't agree on a continued resolution to keep the government funded. And as a result, this happened and millions of government services were paused. In this diagram here, it just gives you a overview of how a government shutdown works, what happens, whether the negotiation has to take place, and how they all have to agree. So it was pretty much everyone in Congress. It wasn't a particular side or anything like that. There were everyone, they could not come to an agreement, right? So that caused this. So how were people affected? Well, many people missed their paychecks, which created real stress for families because a lot of families, they rely on a regular income. And then there are other Americans who saw delays in government services, um, or government or travel. For example, as far as the government services like food stamps, like the SNAP program, there was a delay with that. Payments were delayed and dispersed in court before being restored. Additionally, the shutdown, it disrupted travel a lot. It delayed housing and construction permits. It slowed economic activity in communities that depend on federal spending and tourism. And it cost local businesses and workers a lot of money. So you were financially impacted again. How were you affected? Missed paychecks, stress on families, delayed government services, and delayed government benefits, which we just did go over, and also travel. Tips to protect your finances. first build an emergency fund. So try to save enough to cover these 3 to 6 months of expenses this year so you're prepared if income is interrupted. Diversify your income streams. So having a side hustle or freelance work, it can help if one income source slows down. Stay informed on policy changes. Watch for news about federal budget, taxes, and social benefit programs that might affect you, and budget for uncertainty because you never know. Anything crazy can happen, and you want to make sure that you budget for uncertainty of that, which basically you need to cut non-essential spending now to create breathing room in your budget if government funding gaps happen again. Okay, so economic inflation and job losses. So what caused the inflation of 2025? Do we know? Of course, we do higher tariffs and trade policies. So this in 2025, new tariffs on goods imported from different countries such as Canada, Mexico, China, and other countries, they raised the average cost of imports, which pushed up consumer prices for many everyday products. Then we got the cost pressures in the economy, while inflation has cooled from the pandemic era highs and remained moderate overall. Prices for essentials like food, housing, and energy stayed above what many Americans are used to, keeping everyday costs high. Then there's the central bank policy shifts, where the Federal Reserve shifted its focus this year from heavy inflation fighting to supporting the job market, adjusting interest rates as a response to slower hiring and economic uncertainties. Now, this is why job loss happened. There was unemployment rising. So later in 2025, right, the unemployment rate, it spiked. And they said it spiked to about 4.5, 5%. And that is the highest that they've seen in years, right? Part-time for economic reasons. So millions of people were working part-time because full-time work, it just wasn't available. Many underemployment still put pressure on the household. Then there's the industry shifts and layoffs. So various sectors, especially retail, tech, and manufacturing, they announced tens of thousands of job cuts this year. Well, not this year, this 2026 now, but last year in 2025. And that drove partly by economic uncertainty, the tariff pressures, and automation AI adoption. And again, you were financially impacted because of the higher everyday expenses on just regular old essential goods, job insecurity and income pressure, which contribute to the rise of unemployment. Consumer sentiment down, which cause people to have tighter budgets. Now, I do want to point something out. There are some people who are not like in the job market. They own businesses. You are also impacted. So let me give you a little bit more details into these. So as far as the higher everyday expenses, now inflation did calm down, right, compared to previous years, but those essential goods still rose faster than any incomes for a lot of households, which caused households to squeeze budgets. And there was a recent survey found that nearly half Americans report feeling more financially stressed this time around towards the end of 2025 than the beginning. And then job security, that's self-explanatory, right? That definitely becomes a major impact and worry for many families. And as far as tight budgets, I mean, with job securities, it will cause you to have tighter budgets. People cut back on spending and feeling more cautious about the future. So To wrap this up, you guys, this is how you prepare for inflation and job loss in 2026. You build a financial safety net. So what you do is you grow that emergency fund. Again, 3 to 6 months of essential expenses. That gives you breathing room if income changes. Then you want to track your spending. So review where your money is going, cutting on essential expenses so you have more financial cushion. And then there's the side income opportunity. Consider part-time or freelance work to supplement your main income, and it can help stabilize cash flow if the job market slows down. Then there is the smart budgeting habits that you want to plan for. You want to plan for price changes. Expect that everyday essentials may continue to cost more. It may continue to rise. Budgets for grocery, gas, utilities, and housing first. And then also, you want to avoid high interest debt. Try to pay down credit cards or loans that can eat into your budget when interest rates change. That is it for that, but I did want to show you guys something. I'm trying to bring this over here. Hold on, give me a second. As you can see, I wasn't fully prepared because I didn't know I would be the one to do this tonight or today. Let's make this screen bigger. So this is the conference board. And just to wrap this up, I just wanted to show you guys this page because experts are talking and they want you to be able to know what to look forward to. Economics, they do believe that inflation could continue easing in 2026, while economic growth remains moderate and unemployment may rise slightly before stabilizing. Okay, so you want to build personal finance resilience now, which can later mean less stress, fewer surprises during tougher periods. So this is where I was looking, and you can certainly come to this website to get information. But this is where I got that piece of information here, this here, and then there's the chart there. You can certainly come here and read through that. Just thought I'd show that to you, but that's it. Thank you guys for watching. Drop your questions in the chat. Let us know what part of your finances that you want help with as we head into the new year. I'm going to go ahead and turn it over to Jen. She's going to go over some 5 work from home financial jobs. So if you want to stay for that, she's only going to take about 20 minutes, 30 minutes of your time. Then just stay on because she's coming on next.
Hello, everybody. So today we're going over 5 work from home positions that are in the finance industry. First, we're starting with the company Zillow. I'm pretty sure several of you are already familiar with the company. They are currently hiring a senior financial analyst. It is full time. So let's get into it. About the team, Zillow Group Inc. is reimagining real estate to make it easier to unlock life's next chapter. As the most visited real estate website in the United States, Zillow and its affiliates help high intent movers find and win their home through digital solutions, first class partners, and easier buying, selling, and financing and renting experiences. The strategic finance team is at the forefront of Zillow Group's strategy, planning and key initiatives, collaborating across the organization on strategic thought leadership spanning some of the company's most visible projects. About the role, so Zillow Group is seeking a forward-thinking senior financial analyst to join our strategic finance team. This role goes beyond reporting results. You will proactively anticipate trends, surface risks, and opportunities early, and guide leaders with insights that shape the decisions driving our for sale businesses forward. You will partner across multiple businesses, including Spruce, Zillow's in-house digital title and escrow service and a foundational component of our integrated real estate transaction vision to influence strategy, support forecasting and planning, and illuminate opportunities to optimize growth, margin performance, and operational efficiency. This role is ideal for someone who enjoys variety, thrives in dynamic environments, and leverages AI enabled tools to accelerate analysis and deepen insight. So in this role, you will get to lead forecasting, planning, and unit economic analysis for assigned work teams, work streams, including Spruce's revenue, expense, and margin dynamics. Leverage AI-enabled tools to increase efficiency and insight quality by accelerating analysis, developing scenarios, and synthesizing findings. Partner with product operations and business leaders to shape strategies tied to growth, funnel performance pricing, and resource allocation. Develop and refine strategic financial models to evaluate performance drivers, assess trade offs, and strengthen decision making across the for sales ecosystem. Drive high impact and ad hoc analysis that surface risk, uncover opportunities, and supports evidence based prioritization. Support annual and quarterly planning, interim forecast updates, and long range planning with scenario development, insight, articulation, and clear recommendations. Continuously improve financial processes by introducing structure, automation, and analytical rigor to scale the team's operating model. So the role has been categorized as a remote position. Remote employees do not have a permanent corporate office workplace and instead work from a physical location of their choice, which must be identified to the company. U.S. employees may live in any of the 50 states with limited expectations. So in California, Connecticut, Maryland, Massachusetts, New Jersey, New York, Washington State, and Washington, D.C., the standard base rate pay range for this role is $98,900 to $158,100 annually. This base pay range is specific to these locations and may not be applicable to other locations. In Colorado, Hawaii, Illinois, Minnesota, Nevada, Ohio, Rhode Island, and Vermont, the standard base pay range for this role is 94,000 to 150,200 annually. The base pay range is specific to these locations and may not be applicable to other locations. In addition to a competitive base salary, this position is also eligible for equity awards based on factors such as experience, performance, and location. Actual amounts will vary depending on experience, performance, and location. Employees in this role will not be paid below the salary threshold for exempt employees in the state where they reside. You have to have a bachelor's degree in finance, accounting, economics, or a related field. 3 to 5 years of experience in strategic finance, FP&A, consulting, or investment banking, preferably supporting high growth product, GTM or operations teams, in tech or financial services. Strong modeling and analytical skills, fluent in Excel sheets, and comfortable working with large databases, large data sets, proficient using AI tools to streamline workflow, accelerate insight discovery, and increase productivity, skilled communicator and trusted partner, able to break down complex concepts for cross-functional teams and senior leaders, curious, proactive, and effective in fast-growing, ambiguous environments, able to work across multiple business areas and shift priorities as needs evolve, experience with public company processes or reporting rhythms is a plus. Now, of course, with every company that you apply for, you also want to get to know them. They do provide further details about the company here below that you can definitely come and check out before you apply for the role. And of course, also you can come to their homepage to find out how things work, their benefits, engagement, values, events, and their culture blog. And as every site has their about section. You can get to their about section by scrolling to the bottom, and you can just come here and learn more about Zillow if you do not already know about them. And it's a lot of information listed here that you will find statistics and everything that will help you prepare for that interview. All right. And again, that role is the senior financial analyst. Moving on, we're at clickhouse.com. Now, clickhouse.com, they are looking for an accounting analyst. Now, here at the top, it does give you a background detail of the company ClickHouse. Same thing with ClickHouse as well. You can come to their about section. Where is their about section? Here it is, company. They have a blog, and then here you could come to find out more about who they are, like their story, their history, how they came about, the founders, their investors, um, before going to apply for the role. Now, about the role, you perform day-to-day financial transactions, including entering, classifying, and verifying vendor invoices in AP processing platforms, maintain vendor details, including the most current banking details, vendor addresses, and payment terms, reconcile the accounts payable ledger to ensure that all bills and payments are accounted for properly posted and properly posted, verify and investigate discrepancies, if any, by reconciling vendor accounts and monitor vendor statements, assist with the analysis and preparation of year-end 1099 for vendors. Now, expense management, you will perform onboarding tasks in Expensify and NetSuite for new hires. Manage the corporate expense, credit cards, expense reports, and reconcile the related accounts, analysis, and reporting. Analyzing accounts payable data to identify trends, potential issues, and areas for improvement. This role is the primary point person for all things accounts payable related, including communications with departments, spend owners, and external vendors. Now, the additionals here, you assist with broad finance operations team on ad hoc tasks as needed, assist with internal and external financial statement audits, providing support as needed related to the accounts payable function. Additional normal duties include, but are not limited to, quarterly VAT reclaiming for BV Netherlands, quarterly spend analysis, and monthly procurement updates. What you will bring along with you is a bachelor's degree in finance, accounting, or related field, proven experience 1 to 2 years working in finance or accounting, preferably at a cloud software company. Preference for candidates who have experience using Bill.com, Expensify and NetSuite, proficient in Google Sheets, Excel, strong understanding of accounting principles, financial analysis, and reporting, excellent analytical and problem-solving skills with a keen attention to detail, curiosity. You aren't afraid to ask questions and consider yourself a lifelong learner, present and accounted for. You enjoy engaging with others and you express ownership over your work, product, and accountability to the processes. The typical starting salary for this role in the US is $62,000 to $95,000 a year. The typical starting salary for this role in US premium markets is $73,000 to $110,000 per year. Now, for roles based in the United States, the typical salary range for this position is listed above. In certain locations such as Los Angeles, California, the San Francisco Bay Area, California, the Seattle, Washington area, and the New York City metro area, a premium market range may apply as listed. These salary ranges reflect what we reasonably and in good faith believed to be the minimum and maximum pay for this role at the time of posting. The actual compensation may be higher or lower than the amounts listed, and the ranges may be subject to future adjustment. An individual's placement within the range will depend on various factors, included but not limited to education, qualifications, certifications, experience, skills, location, performance, and the needs of the business or organization. If you have any questions or comments about compensation as a candidate, please get in touch with us at paidtransparency@clickhouse.com. Now they do have perks. They have flexible work environment and they operate in 20 countries, healthcare, and they do contribute towards your healthcare, equity in the company. Every new team member who joins the company receives stock options, time off, flexible time off in the US, generous entitlement in other countries, a $500 home office setup if you're a remote employee, which this is a remote position, global gatherings. They believe in the power of in-person connection and offer opportunities to engage with colleagues at company-wide offsites, which is pretty cool. And you can always find more about their culture, learn about their values by clicking this link. Check out their blog by clicking this link. And this is the link to their LinkedIn page. Scroll on down, you will find the application to where you can apply for this position. Now, this is Fornova. Fornova is looking for a remote bookkeeper. Their role also tells you a bit of about the background of the company. Now, this is an entry level bookkeeping role to join their finance team. They are looking for someone who is starting their career and has knowledge of Microsoft Excel, Google Sheets, and ERP. You do not need a wealth of experience. They are looking for someone who wants to gain experience and develop their knowledge. If you're interested in this position, they would be grateful if you could fill in the form in the Apply Now button. Within the form, you will find the skills and tasks needed in the position. And don't worry if you don't have all the skills, they will give you training if needed. And you will read about the stages of the hiring process by clicking here. It isn't the most conventional, and they hope you will have fun along the way. So this is their hiring process, stage one. In its 5 different stages. So you can definitely come here to go over what that process is. I know that is not quite what I am here to provide you guys, but you will click this link here to go to the role to apply, and you would go through, answer these questions, and then hit submit. Pretty simple application to fill out. To find more out about the company Fornova, definitely visit their About section as well, and you would learn more about their vision, their locations, what they're all about. The next company here is Oakview Group. They are looking for an accounts receivable specialist. It is full time. Now, it does give you the little background here of the company, but they are seeking a dedicated and proactive accounts receivable specialist to join the team. The AR specialist will play a critical role in ensuring accurate and timely collection of incoming payments from customers. The AR specialist is responsible for compiling reports and managing accounts receivable transactions for a company or organization. The role will oversee receivables, establish and implement collection policies, and apply accepted management practices to maintain cash flow. Their duties include reconciliation of accounts, research and resolution of customer issues, and providing support to internal and external customers. This role will be under the guidance of the accounting manager. And this role is $28.50 to $31.50 per hour. Full benefits that include health, dental, vision, 401k savings plan, 401k matching, and paid time off, vacation, sick, and 11 holidays. This position will remain open until March 6th, so you do have time to go ahead and apply now. I just realized maybe you guys could not see that. Okay, that should be better. All right. So the responsibilities, you will Prepare, verify, and process invoices for sales or services rendered. Handle the timely and accurate posting of payments to client accounts. Monitor and collect accounts receivable by contacting clients via phone, email, or mail. Resolve payment discrepancies and disputes in a professional manner. Prepare and maintain detailed records of account statuses and collection activities. Conduct regular account reconciliations to ensure accuracy and completeness. Generate regular reports related to accounts receivable, aging, cash receipts, and credit memos. Coordinate with other departments to ensure proper billing and payment procedures. Assist in the month-end closing process, and prepare related financial reports. Maintain and update customer files, including name or address changes. Ensure compliance with company policies and procedures regarding accounts receivable. Assist in developing and implementing improvements to the accounts receivable process. Respond to client inquiries regarding billing and payment issues. Assist with audits related to accounts receivable. For your qualifications, you need a bachelor's degree in accounting, finance, or related field, preferred experience with accounting software, NetSuite in Microsoft Office suite, particularly Excel, strong understanding of accounting principles and accounts receivable processes, excellent communication and interpersonal skills, capability to handle high volume in high and fast paced work environments, strong problem solving skills and attention to detail, ability to work both independently and collaboratively with a team, experience in a similar role with the industry, proven experience in accounts receivable or a similar financial role, proficiency in Microsoft Office, especially Excel, strong organizational skills, and the ability to prioritize tasks, high level of accuracy and attention to detail, excellent customer service skills, good written and verbal communication skills, strong analytical and problem solving skills, ability to meet deadlines and work under pressure, knowledge of relevant accounting software and ERP systems. And that ends the role there. Again, find out more about Oakview Group. This is their who we are. You can find out about them, their leadership, corporate responsibility, their offices, education, thought leadership, and conferences and alliance network, all here on their homepage. Now, the last role here is at Waymo. They are looking for a revenue account. Now, this is it's full-time, Mountain View, California, San Francisco, California, New York, Pittsburgh, Pennsylvania. And it does give the background of this company as well. So this role is slightly different. It is hybrid. So you want to make sure you live in those areas first and foremost. You will be reporting to the account manager, revenue, technical accounting, and taxes. So you will be performing month and revenue accounting for Waymo entities by working with third-party service providers, automate and improve existing revenue and order-to-cash accounting processes, and help design processes for new business areas. Partner with cross-functional stakeholders on revenue matters related to regulatory and compliance reporting. Communicate with Waymo customers on invoicing and tax matters. You need to have a bachelor's degree or equivalent practical experience, 4+ years of relevant revenue accounting work experience following US GAAP, experience managing order to cash processes, experience handling and maintaining the integrity of confidential information. They do prefer experience working in a cross-functional environment and to lead and guide complex programs, experience driving process improvement in other project management experience, strong customer service, communication, interpersonal and teamwork skills, experience in the tech industry, and experience with SAP Cloud. Now, the expected base salary range for the full-time position across U.S. locations is listed below at 120,000 to 151,000. Actual starting pay will be based on job-related factors, including exact work location, experience, relevant training in education, and skill level. Your recruiter can share more about the specific salary range for the role location or if the role can be performed remote. The specific salary range for your preferred location during the hiring process. Waymo employees are also eligible to participate in Waymo's discretionary annual bonus program, equity incentive plan, and generous company benefits program subject to eligibility requirements. And this is the button that you would use to apply for that role. If you click on the logo here, it would bring you to their homepage. You can reach their blog page by scrolling down here at the bottom. You can find out what their hiring process here is by going here. And to find more about Waymo, you can go here to this learn more, and it will break down their culture, their benefits, community engagement, and locations. That is all for today. I hope you guys found this information very helpful, and we will see you in the next video. Thanks. Bye-bye.